Hey everyone, and welcome back, focused learners. Today, we've got another explainer where we take complex, sometimes intimidating systems and break them down into clear, actionable insights. Today we're looking at something absolutely massive. If you follow digital finance at all, you already know how fundamentally the landscape has shifted over the last decade. But what we're looking at today, it's the highly anticipated final piece of a really monumental puzzle. We're talking about the Unified Lending Interface, or ULI. This platform is literally conceived as the third pillar of India's digital financial revolution. It completes what's known as the epic JAM UPI ULI Trinity. Right, so that's John Don, Aadhaar, mobile, then UPI, and now finally ULI.
Just think about that for a second. We all know the absolute headache of applying for a traditional loan, right? The waiting, the endless paperwork, the constant back and forth. But the promise of ULI is to make borrowing money as seamless, paperless, and instantaneous as firing off a quick text message to a friend. It's a huge promise, and today we're going to look at exactly how this is being engineered behind the scenes.
Okay, let's dive into this with our roadmap for today. We'll be covering the next financial revolution, how ULI actually works, the key features, who stands to benefit, a comparison of ULI versus UPI, and finally, the road ahead. Let's start with Section 1, the next financial revolution. To really understand where we're going, we have to look back to 2016. That was the year the Reserve Bank of India introduced the Unified Payments Interface, which, as we know, fundamentally changed how money moves. Now, that exact same revolutionary energy is targeting the credit sector to democratize borrowing for millions of people. Just contrast the painful friction of the old lending world with this frictionless future. Traditional lending is so heavily fragmented. You're physically carrying stacks of tax filings, land records, and identity proofs from one institution to the next. It's incredibly slow and, frankly, vulnerable to fraud. UPI, however, acts as this invisible digital bridge. Lenders use Open Application Programming Interfaces, or APIs, to pull verified real-time data directly from the source. It essentially takes those old, isolated lending silos and replaces them with a perfectly interconnected web. Moving right along to Section 2, how ULI actually works. Let's move to and see how this builds, because to dismantle those isolated silos, ULI relies on an API-driven plug-and-play architecture, and it already boasts over 50 specific APIs catering to various loan journeys. Let's walk through the exact four-step flow that turns weeks of agonizing waiting into a practically instant decision. Step 1 is the consent application. You, the borrower, apply for a loan and provide explicit digital consent for the lender to access your data. Step 2 is data fetching. The lender's system sends a secure request straight through the ULI platform. Step 3, information aggregation. ULI instantly communicates with diverse data service providers. We're talking things like state land registries, the GST network, or DigiLocker. And finally, Step 4, instant assessment. That verified data flows right back to the lender in a standardized format, which allows their algorithms to instantly assess creditworthiness and issue a decision in minutes. Now, a really critical piece of this puzzle that you need to know about is the account aggregator, or AA. AAs are RBI-regulated entities that securely collect and share your financial data across institutions, but, and this is key, strictly with your explicit consent. Now, while AAs have primarily handled banking and financial data up until now, ULI expands this whole ecosystem. It integrates non-financial data like agricultural data or property records, giving the lender a complete 360-degree view of a borrower's financial health. Which brings us to Section 3, key features of ULI. There are 4 foundational layers here that make this entire ecosystem secure, scalable, and genuinely revolutionary. First is a consent-based architecture. Data privacy is the absolute bedrock here. Literally nothing is shared without your explicit digital consent. Second, it's open and interoperable. Any regulated institution, from massive banks to nimble fintechs, can plug into the system without having to build expensive, one-off IT connections. Third, and honestly this is perhaps the most fascinating part, is alternative credit scoring. By integrating non-traditional data, things like utility bills, GST filings, or even milk pouring data for dairy farmers, ULI allows lenders to assess new-to-credit borrowers who just don't have a traditional credit score. And finally, fraud and duplication detection. By cross-referencing secured assets across national databases, ULI makes sure someone can't fraudulently pledge the exact same piece of property to multiple different banks. All right, Section 4, who stands to benefit? So, structurally lowering loan acquisition costs creates these massive real-world ripple effects. First up are micro, small, and medium enterprises, or MSMEs.
These businesses are absolutely the backbone of the economy, but they often suffer a severe working capital crunch simply because they lack formal collateral. Under ULI, a small business owner doesn't have to endure weeks of manual underwriting anymore. Lenders can instantly look at their GST returns and digital transactions to facilitate same-day loan disbursements. For a small business trying to keep the lights on, that is a total game changer. The second major group of beneficiaries are farmers and the agricultural sector. Historically, rural lending has been incredibly friction-heavy, mostly because verifying physical land ownership is a total nightmare. With ULI, a farmer applying for a Keystone credit card can actually have their land records verified completely digitally. The system can even pull in satellite imagery and soil health reports. This literally removes the need for them to take time off to make physical branch visits. And the third group benefiting here are the lenders and financial institutions themselves. Customer acquisition and manual underwriting are, highly expensive. By automating KYC, document verification, and risk assessment, ULI drastically cuts the operational overhead of originating a loan. This means that small ticket lending, which used to be highly unprofitable for banks because of all those processing costs, suddenly becomes economically viable.
Let's look at Section 5, ULI versus UPI.
Because ULI and UPI share a similar namesake and that same basic philosophy of digital democratization, I think it helps to anchor our understanding by comparing them directly. The distinction is very clear. UPI's primary purpose is instant money transfers and payments, right? It focuses on daily commerce for consumers and merchants. ULI, on the other hand, is all about seamless data sharing for credit appraisal. Its focus area is financial inclusion and loan accessibility, and its key players are the borrowers, the lenders, and the data providers. And this brilliantly illustrates the ultimate core difference. The core action of UPI is that it moves funds between bank accounts. The core action of ULI is that it moves verified data between custodians and lenders. So while one is moving the actual money, the other is moving the trust and verification required to unlock that money in the first place. Finally, Section 6, the road ahead. So the crucial point is, as transformative as this underlying technology is, it's not a magic wand. ULI's success depends on three massive technical and logistical achievements. First up, the standardization of state data. Land records in particular vary wildly in their level of digitization from state to state. Second, the platform absolutely must achieve a 99.99% system uptime if it's going to rival the kind of reliability we've all come to expect from UPI. And third, it requires robust, bulletproof cybersecurity protocols. Without absolute public trust in how this sensitive data is handled, the whole consent-based architecture just falls apart. Which leaves us with this final provocative thought. ULI is way more than just a tech upgrade. It's a fundamental re-architecture of lending itself. By stripping away all those manual inefficiencies and information asymmetry, it's bringing millions of underserved people right into the formal financial fold. Just as UPI made the nation a global pioneer in digital payments, we really have to ask, will ULI set the new global standard for frictionless inclusive credit? It's an absolutely fascinating space to watch. Thank you so much for joining me for this explainer. Keep learning, and I'll see you in the next one.